Okay, guys, we're going to go to market on pound JPY. Why? Well, it's the best of a bad bunch. I'm about to put an order in. I'm going to put it underneath this particular candle. I'll explain it all in just a second. So it's about ready now. So it's 1, 2, 3, 4, 5. 5 candle count back. Look for the lowest point, which is there. So we'll just drop that in, and then I'll kind of explain what it is that I'm up to. So we'll just move that into place. It's an 8 pip target, and I'm not going to increase it. I'm just going to leave it. Why? Well, because when I've worked it out, I'm going against the grain. I am selling. It's a scalp, so it's a bit risky. 8 pips. I'll be in and out and gone. All right, that's the plan. Why pound JPY? It's the best of the bad bunch. All right. What we also have is different elements we can look at here. The pound is strong. It's moved up 4 points, but it surged yesterday. Can't do that indefinitely. It only has one place to go, which is down. The yen hasn't done anything. It's stayed in its same place, but it's gaining ground. So that means that's going to lift up because that can only go higher, whereas this can only go lower. Helps with the decision. The pound US, well, it's been flat today. I've been watching it most of the morning. Was live with the guys earlier on, and we sat and worked it. My diagnosis was just leave it be. Same with Eurodollar, very flat. Now these things I do sort of share constantly. So if you come over onto the WhatsApp group, you'll see I was looking at Eurodollar, told you what I think. Pound and pound JPY, which is what we're looking at. But it's come along as no rushing, but a short-term scalp is available, which is what we're looking at. Now, you can always see what I'm doing. Just drop on the link, follow this. And if you want to get involved with a chat, you can come over into the Discord. There was a bit of a boo-ha because all those who don't say anything were removed. That's because there's a bot running on this thing. And if you don't get involved, it just assumes you're not interested, and away you go. But the only way Discord works is if you talk. It's not a spectator sport. Now, if you go and follow the WhatsApp, the cost of entry into there is your chat because it's not part of anything. That's it. And if you're removed, don't worry. Just come back in and say hello. It's not the end of the world. But if you kick off about it, think about why you're kicking off. It's a very simple thing. You know, your common courtesy, say hello. If you can't be bothered to do that, why has anybody in there got common courtesy to talk to you? Simple stuff. Anyway, let's have a little look at what this trade's all about. Now, as it's moving up, you can start thinking, have I got this wrong? Now, why is that? Because mindset comes into this quite a lot. And you can trick yourself into thinking it's wrong when actually it's correct. I've made basically an analysis of this that says sell it. But be very careful with the sell. So that's what I'm looking for. So I'm not going to go gun-ho into the market. I'm just going to take what it's willing to give. Now, if you go out to the hourly and you start looking at this, how do you know it's going to turn? Well, let's take off these entry exits for a moment. And we can see. So you can see it pushed up heavily here, consolidated, and then had a throw. And it's gone into consolidation again. Big spike, and now it seems to be struggling. Look at the size of the candles. Now, on a 5-minute candle, this means nothing. On an hourly candle, there's a lot of information here. And that's telling me that it's pushed up, it's tried to get higher, and it's failing, so it's going to try and come lower. Even in the short term, but 8 pips is back into this range. So that's the first thing I would look at. But why is it turning at said place? Well, I like Fibonacci a lot. So what we can do, well, actually, rather than an extension, I'll put on the retracement, but I'll put it in backwards just so that the extensions go to the top. There we go. Right. Look what happened here. It got as high as here. It retraced to what would be the 23.6 because I know it's upside down. Went down to 38.2 and bounced right along there, rejected it, didn't get to 50%, telling you the longer that it stays above that 50, it'll try and go back to where it came from. Well, sure enough, it did. If it goes through to where it came from and breaks through, it'll look at the next turning point, which is here. And what's it doing? It's turning at this point. So this I now know is a crucial area to keep an eye on based on this. Okay. Now the next part of it is, all right, is this failing for a reason? Well, it's consolidating to a degree. So it'll try and come back on itself as long as it doesn't breach the top of that. So that's something to pay attention to. So you can go, well, it started down here and it got up to there, giving you some key areas of attraction that this market is going to try and get to. Just like so. Right, there you go. So it's going to try and get to that point. Okay. What if you're wrong? Well, now you've got protection, main protection up here. Okay. So you've got to decide which one of these it's going to run at if you're wrong and bounce off. Well, it's pretty certain it'll bounce off that. I'm comfortable. But what about this sell? Why sell it? Because that looks tiny. It is. So I'll stage to that point if I need to. Why? There's clean air. There's nothing there. All right. It'll run. If it's going this way, it'll bounce here. Set the target forward to accommodate the spread. Swing, protection, wrong. Right, okay. Let's put some indicators into this. What can you see? It's off the outside. It's consolidated. There's no flaring. There's no strength. The next testing point is this moving average, which is bang on the target that I've just put in. General direction down, general direction down. I don't really need these indicators anymore from that point. But if I do, general direction down, breach the moving average, back down to here, ties in with the bottom of the Bollinger Band. Everything ties up that this area is possibly where this is going to go. Simple stuff. Now you can start putting your fibs on again. Is it confirmed? Well, what did I say? 50 is the pivot. The longer it stays above, it'll go back to where it came from. Well, it works the same way. The longer it stays below, it'll go back to where it came from. Where's that? Just behind this barrier point. So again, the target is in roughly the right place based on mathematics and what I can see. Simple trade, easy stuff. So how do you manage this now? Because this is one of the things that catches a lot of people out. Your size needs to be in relation to your account. Okay? If you trade small in relation to your account, you're never stressed. You need to ask yourself a simple question. If this runs away from me, can I get out of trouble? Well, you can if you know where the stop has to be placed. And then when you look at that stop placement, the one question comes into play. Is it worth it? Because a stop needs to be where a stop needs to be. You can't just throw a stop on willy-nilly. You know, if you think for a Murray second, you can go, well, I'm doing 3 to 1 and I need to put my stop in to make 3 to 1. Well, what if it's a 20 pip stop? That means you've got to do a 60 pip move. This is a thin market. It's hardly moving at all. You can see it's hardly moving at all. Where are you going to find 60 pips? If you're on euro dollar, you're screwed, right? Because you ain't going to find it. So you can release the pressure with DCA, or you can just say, I don't think it's worth it. It's not worth it at all. So I ain't going to trade it. and then you wait for a trade that is viable. So the 100% system that you should be looking for has got fuck all to do with that chart. Nothing. It's patience. It's waiting for the right opportunity. That's why I fill things in on a spreadsheet. Does the sheet tell me where to go, how to get into market? No, of course it doesn't. It tells me a state of play at the point that I'm looking at it. Now, I'm either going to agree with that state of play or disagree with it. But at least I've got it in front of me that I know exactly what I'm looking at. And that's what we're doing here. So there we are. It's a 15-minute chart. It's hardly moving. So 8 pips is probably the right trade for this. Chart had nothing to do with it. It's all about the planning of position size, how long I want to be in the chart, what my target will be, what I expect to get out of it. There we are. We triggered in. So we'll see. So we're looking for 40 quid off this. Happy days. What I'll do is I'll just drop it down into 5 minutes so you can kind of see it run in. I like a 15-minute as a trigger point. It's once I've decided the first area. It's nice and easy. But if I click that on there, you can kind of see the counter. Bollocks. I'll just move that over there a second and then trip that on. Can I move that about? No, I can't. Right. Okay. So you'll see the P&L. Well, I see it now. You can see it on the side, can't you? There you are. So we're looking for 40 quid. So it hits that 40 quid. Bash. What we'll do is I'll just let it run out. I'll put a bit of music on for you. Last about 30 seconds, maybe it's 45 seconds. And then I'll come back and explain my thoughts. Okay, guys, it's coming on to the top of the hour. That's all I really give scalps and one thing for. Now, what you can see, it's pushing backwards and forwards. It's trying to get to the bottom. Still got a bit to go, but let's see, it's got 2 minutes left of the candle, and then it'll hit 12 o'clock and we start a new criteria. Now, I can kill this now and just take the money, you know. It's quite a simple process, but look, it's pushing through the target point because it's trying to get here. So if I targeted that, that's a bounce. It could come bounce off and not cover the spread. So the sensible choice is where it's at. Now, if we come up here, we can see. So I don't think I need these tickets, so I'm going to take them off. I got it caught a bit wrong last night. I was going to sell it off the FOMC and it wasn't in the card, so I had to kill it. So what have we got now? 31 quid. So I'll still be net positive if I'm up. So let's just put that over there. We'll just watch it a second. I think when it gets past 35, I'm going to just take the money. I might have to take the money soon, actually. Give us a sec. We'll let it push, because it didn't quite get to the 8 pips. It's got 30 seconds left of the candle. Right, okay. As soon as that goes to 35, we're going to be out. Come on. Come on. Down. Got 14 seconds left of the candle. Do you know what? We're going to take it. Bang. Right. So that's a 32 quid bank. All right. And you might be going, well, why didn't you just leave it, fat fucker? Well, I've got 32 in the bank. I'm now net positive. I can just keep on working. Now, at this point, re-establish the trade, see what it is that I'm after. I made the decision to kill it because the next candle could go off in the other direction. And why could it go off in the other direction? Because it's a new hour. It's a new set of circumstances. And I'm right on a bounce point. So would I go back to market a little bit later? Yeah. But I'll either have to see it bounce that, come up and then go back into it. But remember the first thing that I saw earlier on. It's going against the grain. So common sense told me to be careful. Would it have hit my target? Well, all right. I've missed out on about £8. All right. £8. And I've definitely missed out on £8. But I'm not bothered because I did this through a time scenario. Let me explain. Let me just flick that over. A time scenario when you're scalping is, I'm not looking for the target itself. I'm looking to see if it can be achieved within a time period. It's what's called a 3-candle principle. It's a candle to get in, a candle to take the profit, and a candle to get out. Now, I used the first candle to get in. The second candle, which is the hour, I used to get the profit. The third candle, out. I don't want to take another hour on this selling because I could be wrong. I need to do a full analysis again. But I'm up. I've made a bit of money and it's banked. Now I'll do it again. That's trading, guys. That's as simple as I can possibly make it. And I do this every day. You know, just in, take what it's offering, get out. Take what it's offering, get out. And then when I've got enough that I feel that I'm comfortable with, I'm okay. Now, I only really look at one asset at a time. I don't jump around the markets. So could I make a lot more money? Who knows? But what I can do is make safe money. And that's what I do every day. And it keeps my consistency up. And that's all it's interested in. If I'm consistently banking, I ain't going bust. There you go, kids. Catch you soon.